Hi, good evening. Hi, everybody. Nice to meet you. This is Clara with Coliving Cashflow. Welcome to Cashflow Coliving 101. Many people think that co-living is something only for young people. Many people think that co-living is only for exotic countries or for digital nomads. But reality is that co-living is a very popular tool or resource or a way of living for many people in this country, in our country. Just here in Boston, where the brokerage is based, you want to rent a 3-bedroom apartment, you start paying last month, security deposit, a broker fee, so about $12,000 for a studio 2-bedroom apartment. But when you meet with when you have a couple more roommates and you divide those expenses between 2 more roommates, then you create co-living. You create a small co-living community. Co-living is living together for community and for convenience, mostly also financial convenience, and how cost you allow the or co-living clients in general, residents of co-living properties, to have access to opportunity to live within their means, to pay off their debt and student loans, and also to have more opportunities to improve credit score, travel, you name it. So there are many other misconceptions about co-living, and one of them is that co-living is only for young people, or co-living is only for undergraduate students. That's also a popular misconception, where in fact, if you look at the numbers, about 14 million people in the United States makes less than $30,000 a year, and the resource that they have for living in a dignified place is go to workforce housing. Same for co-living. Co-living it goes well in luxury sectors. It goes well in different community sectors, only women, only guys. But usually people that have a shared arrangement livings are very disciplined, determined, and have a career goals or work goals. And in most of the times, co-living is also a transition on their lives. It's not a full-time thing. It's more like a transition period. But also, co-living is not only in the United States. Co-living is global. Oh, the other way around. There you go. Co-living is global. There are very large co-living companies in Asia. 30,000 rooms, 9,000 rooms in India, 30,000 rooms in Singapore, in Tokyo, you name it. Co-living is very, very popular in London and in Europe. And sometimes they mix with student housing accommodations, which is a little different, but also is, again, very popular. It's starting to grow also in Latin America. So if you go to a popular website like coliving.com, you can find about 25,000 rooms in co-living all over the world. So how exciting is that? And who am I? Who is this person that is presenting to you today? Well, nice to meet you. My name is Clara Arroyave. I've been in Boston and in co-living for about 10 years. I know the inside and out of the industry. I created the first co-living company in Boston and the largest one until 2019 with a team of 17 people, $42 million in assets under management. And we did a merger with a competitor in the pandemic. And now I love teaching everybody about co-living, creating more space that foster economic security for clients, but also double revenue for our investors. So that's how Coliving Cashflow began, as the first brokerage in the United States focused only in co-living properties. So that's who you are talking with today. Why is co-living good for landlords? For landlords, it's great because it maximizes the rental revenue while having less vacancies, meaning if one room is vacant, you still have the revenue of the other room, so you're not really truly vacant, not truly losing money. It works well in regular residential multifamily units, starting most likely 3 rooms or more. 2 rooms or less, or 3 rooms or less, the number doesn't make a lot of sense, but when you have 3 rooms or more as a residential rental, you really can make a difference maximizing revenue using the co-living strategy. Believe it or not, the operational costs are very low. Once you put the furniture in the property, there is really not much to it just to advertise and manage. So the management can be also very simplified using technology. So it's really good for landlords. They're very happy, the ones I work with. For investors, how is this good for investors? When they're looking to diversify portfolio, it is way more profitable than regular multifamily. And in case you try for a couple of years or 5 years, hey, you know what, times have changed, I want to go to regular multifamily, it can be completely done. There is not really a lot of cost one way or the other. Again, similar operational cost, low risk, way high returns, as we discussed. You can also just create a syndication and invest passively in syndications. The average, and I'm talking, nationwide, rule of thumb is you have about 8% cap rate in a co-living property and 15 to 20% cash on cash in average. So that's really good for a co-living property or a residential multifamily, you will. Why is it good for real estate agents? Well, for real estate agents, it's really interesting because they become very specialized and you have a unique knowledge in the market. It makes you different, unlike other agents that only do regular, buying and selling or renting. It makes you special because you know a niche of the asset class that no one else does. So that helps you work with investors year round, not only in seasonality periods or, spring and fall and summer, but year round. And once you stabilize and become a niche leader in your region, there is no one that can take that post out of you. So also, of course, because the more transactions with investors, you generate larger commissions. So this is also very interesting for real estate agents. I get this question a lot, actually, and it's how is different co-living? Why should I stick with co-living instead of being an Airbnb? So I'm gonna go over a little bit of differences. Just as a general rule of thumb, please remember, this is not legal advice, this is not financial advice. Please always consult with a lawyer, please always consult with a financial advisor. So in Airbnb, the market is more short term, 30 days or less. So tourists, travelers, business travelers, I'm here for a weekend for a conference, I'm here for the weekend with my friends for a bachelor party, things like that, or vacation with the family. Whereas co-living is people that stay for long term, young professionals, the students go for I have an internship in this corporation and I need to stay there, 4 months. So completely different client profile that way. And the lease length is also different from short-term stays to way longer leases. In average, here in Boston, the average lease is 9 months in co-living, so way longer leases. Occupancy is much better because it's lead to higher risk if you don't manage well. So Airbnb can experience vacancy, but also the seasonality of the Airbnbs. Whereas in co-living, longer leases, I see a mistake here, is lower vacancy risk. It demands weekends. So yes, for tenants, let's move it to tenants. So you screen a co-living tenant pretty much the same way you screen a co-living a resident, a regular residential lease, whereas you don't have the time, and in many opportunities, Airbnb does the screening for you. So you have way less control in who is at your properties. Not even counting the tax regulations on short-term rentals that you have to cover when your Airbnb revenue, whereas those regulations are not there for just regular residential income in a co-living property. Also, market risk, we can't talk about it because many states are constantly studying and regulating Airbnb, like just what happened in New York. So the market is volatile. If you invest significant funds and then the market change, what do you do? And sometimes these properties cannot be reversed to a multifamily, or the numbers that they generate based on that are not the same for rental as multifamily as Airbnb. Whereas co-living works year-round and it has no effect on their seasonality. And of course, regulatory risk, as we discussed, is way less. It's a very early asset class. So there is still time to get ahead in this asset class. So let's gonna do a little bit of a quick math so everybody understands the benefits about co-living and having a co-living property and why it is so good for investors. Let's imagine you have a 3-bedroom, 2-bathroom apartment, right? And let's say the market says that the price is $3,200, right? For the regular market rent, vacant unit, you go. Once you put the furniture, living room and the beds, and you offer the rooms with utilities, you can lease every room for about $1,400 here in the city of Boston. And once the rooms are filled, you're making $4,200, which is $1,000 more than the initial rent, correct? So at the end of the year, you have $12,000. But hold on for a minute. What happens if you have not a 3-bedroom, 2-bathroom, but what if you have a 4-bedroom, 2-bathroom, right? So let's say the price for a vacant or unoccupied class B 4-bedroom, 2-bathroom is $3,800. What happened to you for the furniture in there, right? And lease every room at $1,300 per month. Here is when the magic happens, ladies and gentlemen. 38 versus 1,300 times 4. So we have a delta or a change monthly increase in rent of $1,400 times 12. Times 12, that is $16,800, which is a 36% increase. 36% increase on the traditional rental apartment. So wait a minute. If you had a 4-bedroom, 2-bathroom apartment, and just by putting furniture, and leasing by the room, you have a 36% increase. What happens when you have a whole triple-decker and you repeat this system? Let's look at a case study. This is a multifamily client of mine. He bought this unit in Medford, Massachusetts. It's a 10-bedroom, 3-bathroom, 3,200 square feet. He bought it a few years ago for $810. He invested just very little in repairs and furniture. He offers furnished rooms. He takes care of utilities and once a week as a cleaning person. Even with that, he rents all the room right now over $1,000, a little bit over $1,000. And at the end of the year, he made over $100,000, $106,000 versus the regular rent that he would have get, which is $7,400, so $89,000. So that delta between 89 and 106 is not a lot, but when you compute, it's a capitalization rate of 12% versus 10. But most importantly, an investor rate of return of 25% versus 19. So if we go over the 4-bedroom, 2-bathroom apartment exercise that we just did, let's look at this in depth, shall we? This is another client of mine that bought what we call here a triple-decker or 3-bedroom, 3-level apartment. Every room here was a 3-bedroom, 1-bathroom. So he bought it for $1.5 million in Somerville, Massachusetts, near universities, near train stations, you name it. And he fixed the inside. He made it 4 bedrooms, 2 bathrooms. So as you can see here, the main bedroom has a bathroom, and then he has 3 more rooms that share this bathroom, plus living room and kitchen, and a very nice deck on the back, right? So once all this was done, he was renting every room, furnished room, $1,500, and the room with private bathroom, $1,700. Believe it or not, that's the price that we have here in Somerville, versus the regular rent for a 4-bedroom apartment, 2-bedroom, in Somerville, $1,000 each. So the delta, furniture versus unfurnished, and with all the utilities included, is an outstanding $226,000 versus $144,000. That's a significant increase, and we're talking about 10% cap rate, cash on cash of 12%, and an internal rate of return of 7% versus 4%, which is the common norm for Cambridge and Somerville. So the returns are just absolutely great. They are well worth the squeeze. When someone tells me, is the juice worth the squeeze? Yes, it is. And I bet many of you have this question now. How, right? How do you start? How do you analyze a property? How do you know if it's good or not, right? And maybe I have a 3-bedroom apartment that I want to try for co-living. You have one of those? How do you find a profitable co-living property? Meaning, how do you find a property that you can run this model on? How do I design it? How do I furnish? How do I find the right people? How do I market? How do I vet? What application process do I use? How do I retain tenants happy paying double the rent for so long, right? And learn also how to invest with third-party operators taking care of everything else in your behalf, right? So if you really want to know all these secrets, and there are no so secrets when you come to my class, please go to the link below here in Coliving Cashflow by EXP and sign up for our market class, a master class. I'm so happy to have you, and I'll be answering all your questions in your class below. Thanks for joining me. Bye.